Welcome to the Commodities Market Outlook, everyone. We've had a very eventful week in terms of performance and volatility for commodities. Gold and silver, especially, have been the center of attraction, with prices rallying to multi-year highs. Gold prices have tested their lifetime highs at $2,080, whereas silver has reached levels which we last saw in 2012. Whereas on MCX, we've had both the commodities rally to their lifetime highs, especially driven by the weaker rupee. The main reason for your precious metals rallying over the last week has been, amongst a multitude of factors. The main reasons were the weaker unemployment situation, which was reflected in the government payrolls data which we saw last week. This reinforces the view that the US economy may take longer than expected to recover, which will eventually force the Federal Reserve to keep their loose monetary policy intact via higher interest rates and further stimulus packages. The tensions between US and China, which seem to be worsening, has also been a very strong support for precious metals over the last week and should continue to support prices going ahead. On the energy front, your natural gas has been the top performer, rallying to almost its highest level in over a year, especially driven by industrial demand. And as we head into the demand season, especially over the couple of weeks when your storage reports should start reporting draws in your commercial levels, we feel that natural gas prices will continue to be boosted further and possibly push significantly higher in the short term. Your oil prices have remained largely in a range of almost 100 to 200 points. I think this was being driven largely because OPEC's supply has returned. Starting August, they've eased their output cuts. Also, the demand situation continues to remain very weak in the US. Now, despite that sharp draw in inventories, we saw last week, we saw that prices were not able to hold those highs, and I think that will be negative for prices in the week ahead also. Base metals have also been a strong performer over the last couple of weeks. We've had copper and nickel rally to fresh highs last week. In case of copper, I think one of the biggest reasons is what has been the supply concerns from producing countries in South America, which are being partially shut down due to the increasing number of cases. Now, that has been something which has been supporting prices, especially copper prices, to a large extent, along with strong demand which we saw from China. Nickel has also been another major performer over the last couple of weeks. Again, the strength in nickel comes from your support from copper prices and also from the strong push for the electric vehicles market. In the rest of the video, we'll be analyzing what are the key events for next week and also a technical analysis of most of the commodities to understand what the important levels are and how they'll be performing in the coming week. Commodities have had a largely volatile week, and despite the sharp correction which we saw on Friday due to profit booking, most of the commodities across the board have managed to actually close in green. Silver has rallied over 12% last week, bringing its total gains to almost 50% over the past 3 weeks. Gold has registered gains of almost 2.5%. Natural gas has rallied close to 19% as we head into the demand season with strong volumes. Crude oil has also rallied over 2%, but the trend has been largely limited to a range. Base metals have also rallied quite sharply and have managed strong gains, with nickel being the best performer, rallying nearly 5%, followed by aluminum at 3%. We have a very important week ahead in terms of data and events. The focus will clearly be on the short-term oil outlook from EIA and IEA. This, along with OPEC's monthly report, should be very critical to oil's future direction. Chinese consumer price index and producer prices index are due on Monday morning. This will be very critical to your base metals, followed by fixed asset investments and economic activity reports on Friday, which should provide further momentum for your base metals complex. The rest of the data, which I think will be in focus, will be your US CPI reports and unemployment claims, especially because of the situation in the US where employment continues to struggle and remains a big concern. We continue to maintain a very bullish outlook on your precious metals collectively. Gold, I think over the short term, we are expecting prices to test 58,000 to 60,000. Technically, going by last Friday's correction, I think we might see prices slip to 54,400 to 53,500 levels due to that extended profit booking move. This is being further supported by the fall in OI, which is also reflecting some amount of lack of buying interest in gold prices. We have a lot of positive reasons, a lot of factors supporting gold prices, especially the tensions between US and China, which continue to worsen. And the focus will also be on the US monetary package, which should be announced sometime next week. Another key reason is for your strength in gold prices has been the grim employment situation in the US, which has been the cause for a weaker dollar, pushing gold prices to record highs. Silver clearly has been the outperformer over the past few weeks, rallying close to 50% from its levels near $20. As you can see from the charts, volumes have remained largely above average, which is reflective of that strong buying interest, along with a nice build up in OI, which further cements the bullish idea. Friday's corrective move should extend further, possibly till 71,900 to 68,100. And ideally, once we achieve those levels, we expect further buying momentum to push prices higher to 82,000 to 85,000 in the short term. Crude oil, we've seen prices remain largely in a weak. Technically, if you will notice towards the end, we've had a false breakout in prices above that resistance as 3150, which indicates a strong lack of buying interest. We're keeping a slightly bearish view over the week and expect prices to test 2900 to 2850 and possibly remain within that range as the market focuses on the monthly oil reports. In case of crude, as we all know, that demand continues to remain very low due to the increasing number of coronavirus cases and the following lockdowns. Low demand and that increasing supply from OPEC is something which has kept prices pressured over the last couple of weeks. We've seen a strong rally in copper prices, and chances are that we should expect the current momentum to take prices higher. But again, technically, the recent rally has been, the recent build-up has been a cause of concern for how the prices are behaving. While your volumes have remained steady, open interest has declined ever since prices have peaked above 500. This, coupled with a negative divergence from momentum indicators, doesn't bode well for copper prices, and we expect it to test 470 to 475 in the short term. Once we reach those levels, I think we should see that buying momentum re-emerge and push prices higher. Nickel is a counter which we are very bullish on in the short term. We've seen prices break above that critical resistance of 1050, which has been intact over the last 7 months. The strong demand from EV, along with supply concerns, and that upside from the momentum from copper has been the key drivers for nickel over the past couple of weeks. Technically, we are looking at a small corrective move back to 1050 and 1030 as a worst case scenario. Once we reach that level, I think it should be a good opportunity to buy nickel in the short term, possibly for our targets of 1180 to 1200 over the next couple of weeks. That covers everything for commodities. Thank you.